Here we have the gap open list this morning on the Nasdaq comp, and so far year to date we have had a pretty good correction as we had called for. Now what we'll be talking about MMTs is just like yesterday. Signa gapped up. When they gap up and they run them, they were all rolling over and selling off. Now granted that the market is not nearly as overbought as it was, and individual names outside of the indexes have pulled back significantly, which is good because this is how bull rallies should act. And today's trade management is taking the gap up list, letting it make its high, using the application and getting short. Remember that during that 15 to 30 minutes, that first 15 minutes is where a lot of electronic trades are going off. And that you kind of let them set up, you let the double bottom set up, you let it move, you let it take out the previous bar to the upside with the 3-minute action buy bar, you let them hit the top end of that intraday high. This is volatility gap. We have sold off extremely well. Now, as far as the gap open down list goes, we have GIII, Citrix Systems, that's it. So the gap down list on the Nasdaq comp is diminished. Once again, we've had about 5.5 good weeks of selling. And these gaps every single morning, when they make their high, become an immediate short trade when the application says that things start to turn. And keeping the stop market orders above the previous high is always a good thing to do. How to trade the opening bell volatility. Stocks so far, as they go up and make their highs, have been rolling over and making lower lows. And as far as Signa goes, the volatility is to know how to trade that volatility to that short side of the entry. Then it changes and it goes down. A lot of the other stocks we'll talk about on the NYSE. So trade management is to let them go up. There's no buyers there. It warrants a short sell. Support level is the key, is how far do they run in our platform will tell us that if they're only running up so high and then stalling out, that they remain weak. Remember, you have a certain amount of down days in the market, and then there are going to be certain up days in the market. All the key indexes are below their falling below their moving averages and things like that, and the bull sentiment has changed a little bit because of the slowdown and the uncertainty. We have Bernanke coming out at 3:45 talking about the economy. You got Fed Fisher on there right now talking about how growth is going to be the opposite of what everyone thinks, 3 or 4% in the second half. Well, we're going into the second half. Summer rallies and bottoms have a way of being put in. And the thing about it is, when a stock gets an intraday low bottom put in and it moves, it consolidates higher at higher price action teeny levels in the brain that we have, the SMF market maker application, that shows expansion, delta expansion at support lines, and they set up and they go higher. Now, nothing ever goes straight down, so the upside counter volatility is to be able to meet those reversals on the top end of the day and get net short, unless it's one of these days that people are coming in and they're buying because they find that they're getting deals. That's yet to be seen, because as we get into the opening bell in the next 45 minutes, it's all about how those sell gaps come down. They come up, they test the top with an immediate reversal bar, you get net short.